Hello, everybody, and welcome to another special edition of the Sharesify podcast. Today, we're delighted to be joined by Nicola Takada Wood, Managing Director of the AVI Japan Opportunity Trust. Nicola, welcome to the show.
Thank you very much. Thank you for having me.
No problem at all. Now, AJOT, it's a best ideas trust, isn't it? So quite concentrated, usually between 15, 25 stocks, and you've got a
Yes, that's
very
right.
specific set of criteria for investing. So now, would you call it a value approach?
It's really a combination. So yes, at the crux of it, it's a value approach in the sense that the companies that we look at have to be trading below a certain valuation. But as the name asset value investors would suggest, we also tend to look for asset-backed companies. So we are specifically looking for companies that have cash, investment securities, or real estate on their balance sheet. And that has to make up a significant portion of their balance sheet in terms of as a percentage of market cap for us to consider the company. And there are a number of other criteria as well that we look for example, the shareholder register. As you know, we take an activist approach. We're very actively engaged with our companies. So that's another an aspect that we look at.
Right. Okay. And in those regular meetings, are you looking at ways or discussing ways to reduce any discount and unlock that value?
Absolutely, yes. And this is actually where the sort of second part of my answer comes in terms of, is this just a straight up value strategy? What we have found over time, we've been investing in Japan from the global side and also with a standalone vehicle, which is AJOT for about 40 years now. And what we found over time is that if you are looking at Japan, the sort of traditional value type of companies are very attractive. You know, there are many companies that trade at very cheap valuations, that have a lot of cash on the balance sheet. But the one thing that you also have to be very aware of is that some of these companies are very cheap for a reason. The sort of wary investor can get very easily lured into value traps in Japan, and that has happened many times before to people. So what we have found is that, yes, you have to have those value characteristics, but there also has to be some sort of quality metric as well as a combination. What we mean by that is, for example, the company should be generating cash. It should be a decent company underneath it all. We don't want to buy a rubbish company that is just going to get cheaper. We want to buy a company that is a decent company, but it is undervalued. And with working with the company, we are able to help that company, as you say, close that discount between what it's trading at now and what it should be trading at in terms of its fair value.
That's really interesting, Nicola, as you say that there are lots of companies that look cheap but are cheap for a reason. And the market's actually had a really good run, hasn't it? Was it 25% almost last year? And again, it's one of the better performing markets this year. So I guess I'm wondering, is there still the opportunity set for you to find these companies with assets on the balance sheet and unlock that value?
Absolutely. So what is really exciting, as you mentioned, Ian, is that the opportunity in Japan is starting to become recognized. So this corporate governance reform has been in place sort of behind the scenes for over 10 years now, but it's really in the past 2 or 3 years, I think, that people have really recognized that not just things are changing, but things have changed. We have already seen dividends, for example, shareholder return hit record highs now 4 years in a row, for example. We know that the Tokyo Stock Exchange is very focused on companies that are trading at low valuation multiples that they don't see as really being focused on shareholder value enough. And it feels like there are a lot of different parts of the great Japanese economic machine or market machine that are really working towards getting valuations across the board higher. However, so far, a lot of that improvement has been focused more on the larger cap end of the market. There's a number of different reasons for that. One is that those companies were already further along in their corporate governance journey. You know, those companies are probably more used to having foreign shareholders on their register. They're more used to having to deal with activist investors, for example, than smaller or mid-sized companies in Japan. The other thing that's been really driving a lot of those larger companies has been the yen. Simply speaking, you know, 3 years ago, the yen collapsed down 30, 35%. that has obviously been a big driver and a big tailwind for some of these larger cap exporters. So parts of the market, yes, we've seen a really big move. The large cap exporters, the trading companies, and the companies that are within the new Prime Minister Takaichi's focus in terms of trying to get Japan to be more innovative. So AI, for example, cybersecurity, etc. So those parts of the markets, yes, they have done really well. Small and mid cap, within pockets, there have been some real success stories, but as a whole, the opportunity set is still very attractive. There's still, if you're looking at the small cap universe, there's still about 800 or 900 companies which have more than 30% of their market cap in cash, for example. You know, when you're looking at the price to book ratios of small cap Japan, it's nearer 1 times, whereas the Topix 500 is nearer 2 times. So there's actually been quite a significant divergence in the market between those larger cap names and the small mid cap names, which is interesting because historically, small cap Japan has outperformed large cap Japan almost every single year. It's only really been in the past 3 years or so that you've seen that reverse. And that to a large extent has been driven by the yen, but also because, as I said, you know, those companies, the larger cap companies, they were already on their way to corporate governance reform, and they were already further down that path than a lot of smaller companies have been.
Right, so your focus is very much on that small and mid cap end, is it?
Yes, absolutely.
Right, okay.
Yeah, it's interesting. The as you say, yes, of course, bigger companies will be more used to outside investors coming along and wanting to discuss kind of governance issues with them as well. Has the corporate reform story, you know, got stronger actually, if anything, with the new Prime Minister?
Yes, I would say so, for a number of different reasons. The first is that Prime Minister Takaichi is a very well-known protege of Prime Minister Abe, the late Prime Minister Abe, who of course was the vanguard in terms of corporate governance reform. You know, he coined the term Abenomics, and she is known to be very, like he was, pro-market, pro-corporate governance reform, and pro-shaking things up. And I think that's something that Japan hasn't had for a very long time, and is in desperate need of going forward. What is also interesting is that she has been very vocal about particular issues that she sees as problematic. For example, excess cash on the balance sheet. Now, she doesn't necessarily say that cash should be used specifically for shareholder return, but what she does say is it should be used for something more efficient than just sitting there. So whether that's shareholder return, whether that is CapEx, whether that is R&D, whether that is paying your workers more, use that cash for something. And she's been very explicit about saying she actually thinks companies should be penalized for hoarding cash going forward. That's something that she mentioned in a book a few years ago. So at the same time as her coming into power, it's really interesting timing because this year also marks the revision of the corporate governance code. And that's the first time that has been revised in over 4 years. So you have this, obviously, you know, a super majority in government with a very charismatic new leader at the same time as you have a revision of the corporate governance code. And I think the timing of those two things happening at the same time is very interesting. You also have the Tokyo Stock Exchange, who, you know, I think they get asked the question, well, how far are we through in terms of this reform? You know, hasn't all the low-hanging fruit been taken already? And their answer is very clear. They are very aware that Japan has 4,000 listed companies, which is twice as many as the S&P. It is inefficient. It is difficult to invest in. A lot of these companies have no e-disclosures in English, for example. There are many, many companies that should not be listed. It is in their interests. People forget that the TSE is actually a listed company, right? So it's in their interests to make Japan investable, to make it attractive to global investors. And they are really on a mission to streamline the index, to improve the quality of the index. And in their, from their perspective, we are much more at the beginning of reform than we are at the end. They feel like the prime part of the exchange, the larger cap part of the exchange, yes, they've made progress, but there is still, you know, swathe of thousands of companies that have plenty of room for improvement. And as you know, they do this naughty list, right, that they publish every month on their website. And you really don't want to be on the naughty list. But every single month they are still doing it, and every single month they are going and talking to these companies and talking to them about how they can improve. So I think that the corporate governance reform story is really starting to spread across the breadth of the market, and we're going to see a lot more in terms of interesting things happen in the next few years. I would imagine.
Wow, I think London Stock Exchange could take a leaf out of that book, couldn't they?
Well, it is interesting. I mean, people look at, for example, Korea and get very excited about corporate governance reform there, and I do think it is exciting. But one person did explain this quite well to me. It's like, what's happening in Japan, there's already proof in the pudding. It's not just the idea of corporate governance reform. We can actually see that it's working, and that it has worked in a number of different parts of the market. So this isn't just an idea that is aspirational. This is actually happening, and you've got 10 years behind you of those changes, which are actually now coming to fruition, and you can really see that difference coming through.
Right, no, thank you very much. And can you talk us through the key benefits of the Fidelity Japan combination? Now, being a bigger trust, does that give you more sway? Can you build more influential stakes?
Yes, so as you highlighted, we are a first and foremost an activist strategy focused on small mid-cap companies in Japan. What being of a larger size enables us to do is to take larger stakes, as you say, and helps us get into the driving seat of more companies within the portfolio. So, for example, pre and post rollover, the sort of average the average holding in terms of our shareholding has, as you would imagine, almost doubled across the portfolio. So we added to a lot of our existing names, and we like to be at the top end of the shareholder register. We like to be able to be having those conversations as the top 1, 2, or 3 shareholder in the company. We also have some additional names that we added to that we've been monitoring, of course, before the rollover. So the shape of the portfolio is very similar to what it was before, but the individual positions that we have are larger.
All right, so thanks very much. And perhaps can you give a few examples of some recent successful campaigns that you'd sort of call out that have been really delivered for shareholders?
Yes, so a couple of names that come to mind. Over the past 12 months or so, one of our top performers is a company called Wacom. They make mechanical or electronic pens. And we launched a public campaign with the company over a year ago now. And we are starting to see some real change in terms of the strategy at that company. We focus on operational side of things with companies, not just the balance sheet. I think a lot of actors are very focused just on the balance sheet side, but we focus on both, the operational improvements and strategic improvements that a company can make, as well as, of course, improvements on the capital allocation side. And so Wacom has really started to listen to what we've been proposing, and it's been quite a successful outcome from this public campaign, which we're only some of the way through. So hopefully more good things to come from that. There's another company called Kurabo, which has been a real, when I say success story, I'm particularly proud of this one because just to give you a little bit of background, it is a kind of a conglomerate structure. It's a very old school Japan company. It's been around for over 100 years. And originally it was a textile company, making uniforms and things like that. Now, as you can imagine, being a company in Japan, when you then have the rise of the textile industry in Southeast Asia and South Asia, how are you supposed to compete? But Kurabo held on to this business with both hands because of, well, sentimentality, really. That's where the company started. They had this very long history, and it was it's very difficult for them to remove themselves from that sort of feeling of nostalgia, I suppose, with that business. The problem, of course, being that part of the business was loss making, was dragging the rest of the business down. However, through a lot of discussion, a lot of persuasion, we managed to get them to see things from a shareholder's point of view. And last year, they finally announced that they were going to restructure that business. They closed down their largest and least profitable, or I should say most unprofitable factory for the textile business. And that has, of course, triggered a revaluation of the company from the stock market and from shareholders. So that's been a real success story, I would say. And there's one I admit I'm quite partial to, because I feel that changing a company's strategic direction when there's so much nostalgia and emotion involved in it was quite difficult. So I'm very proud we managed to do that.
All right, no, thank you very much.
Well, that's fascinating stuff. I don't know, does a second section, does the handbook still exist for the market? The old first section,
the giant
second
book
section?
with every single company in it,
Yeah.
with the ticker. Yes, absolutely.
I'll have to dust off my my copy of the second section.
It's called the Shippy Hall.
Probably a bit out of date now. Nicola, it's been lovely to have you on. Thanks very much indeed.
Thank you very much for having me.
Absolute pleasure. So if you've enjoyed today's edition, please follow us on social media. Don't forget to like. We've more guests on next week. And if you're a fund, a trust or a company and you'd like to reach out to a retail investor audience, email us at sharesify.com. We'll do the rest. Bye for now.